an attorney in a very reputable Austrian law firm, and I think in the transactions department. And before joining Plug and Play, he completed a postgraduate master at the famous University of Berkeley in California. Welcome, Steve.
Thank you, Klaus. Thanks for having me.
Then we have Felix Plog. Felix Plog is a partner in TruVenturo, which is a company investing in early stage deep tech companies. I think you will explain that a little more detail a little later. Prior to joining TruVenturo, he worked with Delivery Hero, which is the company he actually sold to Food Panda startup that he co-founded back in 2013. Before that, he worked at Wall Street Online, Axel Springer, and Roland Berger. And finally, we have Gábor Pozsonyi. He's a partner in Portfolion Capital Partners Hungary. And prior to that, he was working in the banking sector, advising several banks, such as a Chilean bank, and he was holding C-level positions in Hungarian banks too. Welcome, Gábor.
Good to be here.
Thanks everyone, for participating in this discussion, trends in funding and company building, which appears to me to be quite an interesting topic nowadays. I'd like to only give you a 1-minute intro to this topic. Maybe a short flashback to 2019, which happens to be a record-breaking year for venture capital investments in general, I believe. And following this, we had quite positive predictions for 2020, which also included foreign investment, especially from the US and Asia too. But generally in Europe too. So there appears to be a lot of money available for funding in the market. And we also saw increased late-stage investment activity here. But that changed to some extent due to the COVID crisis. So there was some downturn starting early this year. But as what I've read is that we're still around the 2018 levels when it comes to VC investments. And also we have, particularly in Austria, we also had implemented the Investment Control Act, which is something that, another panel is discussing today. But still, this has certainly an impact, at least here in Austria. And more generally, I believe we had increased investments, maybe also spurred by the COVID crisis in digital business models and digitalization in general, e-commerce, cybersecurity, and on the one hand, and on the other hand, I think we saw a lot of investment in healthcare, e-health, and also the biotech sector has been fairly untouched, I believe, by the COVID crisis, or even been in a better position. Now let's move to the discussion. I think the topic suggests that we have two main topics. This is trends in funding, and for second part, trends in company building. And so my first question will essentially go to all the panelists. So I would like you to ask to give a brief statement and a brief description of your investment firm or the fund you're working for, and maybe explain a little bit about your investment strategy and the rationale behind it, so our viewers get an idea of where you're coming from, and this should then be, I think, a good basis for further discussion. So I'd like to start with Doris. Could you begin?
Yeah, for sure. Tecnet Equity, as you already have told, is a regional venture capital fund with a volume of more than 50 million euro to invest in seed and early stage tech startups. We are able to invest up to 3 million euro in each of our portfolio companies, whereas our sweet spot is definitely at 600,000 euro for our first time rounds. We are investing in deep tech, industrial tech, med tech, as well as in ag tech or consumer tech startups. We do have an Evergreen Fund, and this are very flexible to fit in the perspectives and the plans of our startup companies. We now do have a portfolio of 11 startup companies and are rather actively investing also in these days.
Okay, and so you're focusing, I understand, on early stage investments. Is that right?
We are focusing on early stage investing. We are able also to go much about in a pre-seed phase. Perhaps I can come to that later on, but our main focus is the seed stage.
Okay, and maybe one or two sentences. How have you reacted, or did you have to react to the COVID crisis to some extent?
Of course, all the companies are more or less affected by the COVID crisis. Fortunately, I think the tech sector hasn't been so much affected, and especially the startups in the life science and IT sector are more resilient to this crisis than other ones. But we see our role very much as a partner of our founders and teams in the startup companies, and therefore we got in touch very intensively in these days to help them in all of the perspectives. Of course, liquidity was an issue, and this was very much depending on the different business models of the startups. Some of them did reduce their activities drastically. We have one of the startups being in the hospitality sector, for instance. Of course, they were more affected than other ones in the life science sector.
Okay, thank you. Great. I'd like to move on now to Felix. So Felix, could you briefly introduce TruVenturo, which is not a fund, but an investment firm?
Yeah, thanks a lot, Klaus. First of all, great to be here, and looking forward to this panel. So about TruVenturo, I think we are a bit of a non-typical investment company, since we mostly build companies ourselves. So we are a company builder. We have launched more than 20 companies over the last 12 years. And what we usually do, and therefore we're also looking to the VC market more from the lens of the company that is invested into. We have 20 companies roughly, and all of them have VCs that are invested. And these companies are at very different stages, some of them very early stage and some of them at very late stage, like for example, Home2Go, which is the largest European marketplace for holiday rentals. And I think generally we have seen that there was no dry up of the market in the sense of that funds weren't provided anymore. It was more that you had one part of the portfolio that was kind of leaning towards being more problematic, and then the other half actually being propelled by the crisis. And I think Home2Go is a great example of that, which is a company that saw like an enormous uptake in traffic and revenue through the crisis. And I think it's we can't really complain about the availability of cash on the market, and I think there was no drying up, as already said, which we saw like a couple of years back, maybe after the financial crisis. And I think also the public market that recovered very quickly in the technology sector contributed to the VC market kind of calming down and keeping on actively investing. So from that end, I think we really didn't see too much of a disruption of our business. I think there's one segment that we also invest into companies, which is life science. So that's, we build companies on one hand, but we also invest in companies. And this part of life science actually is also, and I can also underscore, that this sector has actually seen an uptake as well. And so we invest into longevity and biotech, and it's a sector that is doing very well and is almost agnostic to the crisis. So all in all, I have to say, apart from a few outliers in terms of market model or business models that were heavily impacted by Corona, we haven't really seen a major disruption in our portfolio, and which is great.
Okay. Okay. Yeah, we'll talk a little bit about the consequences of Corona in more detail soon. But before we do so, we want to first hear Gábor. Could you please a little bit explain?
Am I the only one who's hearing another panel as well, parallelly?
Yeah, we're hearing something in the background.
A little bit, yeah.
Okay, but I think we cannot really avoid this. Maybe is this coming
Maybe
from
a technician
Stefan?
can mute me. Is there a chance to do that?
Great, that sounds great. Okay, Gábor, could you please elaborate a little bit about Portfolion and your strategy or your rationale of investing?
Yes. Again, it's good to be here. It's always a pleasure to be in a panel like this. Portfolion is quite a peculiar animal. It's a fund manager owned by the largest Hungarian and one of the largest Central and Eastern European banking group, OTP. So you can say that Portfolion is a corporate venture capital firm managing 5 different funds from early stage growth, even buyout. But we also have to say that although it's a corporate venture capital firm and a fund manager from a funding point of view, but it's not really a corporate venture capital firm in terms of we don't need to follow our funders' strategic interests in every single investments we make. So we are required to return financial results and not invest according to the funder's strategic interest. Having said that, we are pretty much active in the fintech space, but also in internet security, education technology, and RegTech also. And probably e-commerce needs to be mentioned as well. As far as COVID is concerned, we mainly saw a positive impact on the current portfolio we have. In some cases, a tremendously positive impact. In e-commerce and internet security, those firms are growing like we never expected. But we do have another aspect of the COVID. We do have technical challenges in our investment activities. We are going to just this month we are going to sign our first ever investment in which we never met the actual funders in person. That's kind of a weird experience. So this is what we are managing, like 20 plus. Managing like 20 plus companies, and like 240 million euros under management. That's the size of the 5 different funds we manage.
All right, thanks. Yeah, that's very interesting. Also, the question has been discussed this morning on another panel, whether anybody has made an investment not having met the founders or the members of the target before. I think the answer was only one meet. There was one meeting, but I personally know at least one investor where this happened already before COVID, to be very honest. So I think this is certainly something that's gonna be relevant in the future. So finally, I want to move to Steve. He's representing today a U.S. venture fund, which I hope that we get a very interesting insight from too. Steve, could you just briefly outline and explain a little bit and tell us a little bit about Plug and Play?
Sure. Thanks, Klaus. So first of all, I want to, get back to what Gábor and you just said a minute ago when you said you barely meet the founders in person before you make an investment. Actually, my impression was that when we are doing investments, I would say like between 10-20% of the investments we are doing, we never met the founders in person before doing the investment, because when Plug and Play started like 20 plus years ago, before having like teams on the ground in Europe, we also were focusing on the European market, of course, and we actually used the video conferencing tool quite a lot also before COVID. But coming back to Plug and Play, like we're not only, and that makes us maybe a little bit unique, and not only a venture capital firm, but also like an accelerator, meaning we help company building as our main business model, and just our like second arm under quotes is doing the investment part. And what is maybe another difference to a traditional venture capital firm is that our main investments, and the majority of them, are made out of our family office. So we're not using investors' money. We're using the money of our owners of Plug and Play for our early stage investments. But recently that changed insofar as we raised our first outside money fund, I think 3 years ago. And we did, since this first fund, 5 additional funds, and we're currently raising the first pan-European fund in this regard. So we don't have like a clear, unique investment strategy. We rather say, okay, for the money from the family office, I would consider ourselves more an early stage investor, writing rather smaller checks and not looking for board seats and so much influence, but despite still like supporting the company in their growth phase. Whereas of course for our outside money funds, we are more the fund managers there, and we follow the strategy where the fund is committed to. That's so far to Plug and Play, and maybe 1 or 2 sentences regarding the influence and the consequences of the COVID crisis. It is quite interesting, in my opinion, to see that through this, government funding, fund matching facilities and the programs, there's still, and I think Doris mentioned that before as well, a lot of money in the market. So we see on the one hand side that due diligence process for investments are more intense, and we're looking rather 3 or 4 times on investment, and definitely more in detail than before. But on the other hand side, we see also some startups who are asking us, well, we could raise more money because there are matching facilities, there are public loans, there are other investors who are looking for good investments. Do you recommend to us to take this money which is currently on the table? And that's a quite tricky situation, in my opinion, and no one can really predict how the situation is looking in like a year. So that's probably the most challenge in the COVID situation, in my opinion.
Okay, thanks for this insight. I think this brings me to my first question that I had in terms of funding trends. Now we kind of discussed the status quo or the recent past as to the consequences from COVID in the investment world, so to say. But what do you think? I'd like to start with Gábor. What do you think? Will that, let's say, these positive consequences in the VC world, so to say, or the startup world. Will that continue? Will that growth in the tech sector continue, or will we see a downturn within the next 6 to 12 months, which might be the result of a general economic downturn, and which would possibly affect the tech sector too? What is your take on this?
I frankly think that this venture capital business is in the vanguard of building the post-COVID world. So I definitely think that there's going to be an upturn in technology investment. The major trends support it, and the actual value propositions that we see coming up from Central and Eastern Europe, Poland, the Balkans, also, and the Baltics mainly, Hungary, the Czech Republic. We are seeing amazing value propositions coming up, usually by founders of very strong, not only technology, but even, I would say, scientific background. So we see a flow of mathematicians and physicists and all sorts of technology guys coming up with very relevant value propositions. So I'm expecting a definite upturn. As far as the funding is concerned, I don't think my opinion in this is very relevant, since we, as a venture capital arm of a huge financial institution, we simply don't have any issue with fundraising. We have one founder we have to convince that we are taking care of their money, and since it's a banking institution in an interest rate environment that is present in Europe, as well as in Hungary and Southern Europe, which is the major territory of OTP, our founder, they are definitely very positive about what we have to offer.
Okay, thanks. Doris, what is your forecast in this? I mean, you have years and years of experience.
I think it's quite a different time than the past crisis. We see that now technology is also on the stock markets highly valuated. So I think that we will see quite an upturn. But nevertheless, at least in Austria, we see many founders or potential founders that are not so eager to get into starting a new company, and I think there are some pushing mechanisms quite needed, that these founders are really getting a good start.
Okay. What kind of mechanisms do you see? What do you be talking about here?
Many investors are more or less sticking to their own portfolio companies. So in the first step, many of them looked for liquidity for their own portfolio companies. Now I think the investment processes started again, also to look at new companies, and of course there are different ways for due diligence, not only because of the remote situation, but also because of very difficult short-term perspectives. What we did is we started with a specialized pre-seed instrument. We now started with a safe for early stage startups for first investments. So it's the instrument invented, so to say, by the team of Y Combinator. So it's very well known, I think, internationally and in the States, but nevertheless in Austria, there hasn't been so many safes in place up to now. So we set it up for the Austrian legal and tax system. Because we think it's very important, especially for these days, that founders can focus on setting up their business and not so much on term sheets and especially valuation propositions.
For our views, so SAFE means simple agreement for future equity, which is similar to sort of a convertible instrument, a convertible loan, right? Okay, yeah, no, that's very interesting. I want to move a little bit to a more general topic here before we start talking about company building. Felix, maybe due to this, due to this immense growth, but also maybe due to COVID-19, I wanted to know in the process of making decisions on investments, has anything changed in the past 12 months, and do you see anything that will change substantially in the next year or so?
You mean in terms of investment
startups and founders would
criteria?
Be very interested.
Yeah, well, I think from my point of view, what has really changed in the market is that this COVID crisis has kind of pulled forward a few developments that you maybe would have expected to happen in 10 years. They're happening now. And I think there are lots of examples for this, that customer adaptation on one hand, but also business adaptation to new digital platforms or new way of distributing goods, direct to consumer, etc. I think this crisis is creating heaps of opportunities to found new companies. And I think that like one area which is particularly interesting is B2B, which of course has been kind of simmering over the last couple of years, and lots of startups have launched in the B2B space over the last couple of years. But I think this is going to vastly accelerate. And I think you just have to really be picky about the right segment and pick the right market. But I think if you have the right spot, then I don't think there is any difficulty of raising capital. I really feel that access to capital is very, very good. And I think also that fundamental parameters of whether to make an investment or not haven't really fundamentally changed. It's just that the market environment has changed in a dramatic way. And I think that lots of opportunities, again, have come up on the radar that weren't there maybe like a year ago. And therefore, I think it's a great time to found a business. And the criteria that we would apply are the same as usual. We would look at the market, at a defensible business model, and of course at the team, which is probably at the focus of what we do is working together with founder teams very closely.
Okay. Yeah, thanks. I mean, maybe when talking about these sort of trends, we also have, of course, to touch upon briefly at least on sustainability, on sustainable services, on sustainable products. And I just quickly wanted to ask you, Gábor, so how is that playing a role? And it's probably increasing. To what extent is that field increasing in your firm?
I'm very much biased personally because I'm coming from the impact banking arena, and part of the reason I joined Portfolion is is a strategic initiative to try to turn Portfolion's investment strategy into whatever you call it, impact investment or ESG investment or sustainable investment. The word I like to use is meaningful investment. I was just going to say that what Felix said, that COVID just brought forward a number of changes in the global economy, which would have happened in a 10-year period. But it also, I feel that it also means that we somehow need to go back to the basics in terms of searching for very relevant and very meaningful value propositions with utilizing technology, basically. But I'm talking about meaningful investments that is sustainable, that it's relevant to its final customers. And I guess we are going to see a little bit less of the fancy value propositions, if you see what I mean.
Yeah. So you're saying that you're not only investing in like sustainable businesses itself, but also in business models of any kind that provide their services or products in a more sustainable way. I would say rather anything else will be a problem in the near future, right?
Exactly. We are not an impact fund, definitely. But we do think that it makes tremendous business sense to gradually apply all sorts of sustainability, ESG, impact criteria into incorporate those into the investment decision process.
Yeah, I can absolutely relate to that. Okay, thanks for this. I would, if there's no other comments on this general topic of funding trends, I would slowly now move to the second portion here of the discussion, which would be the topic of company building. I think we have not much time left, so approximately 10 to 15 minutes, if I'm right. And I'd like to start with Steve here from Plug and Play. Could you briefly outline what you understand by company building, what it entails, and how important you and Plug and Play consider this instrument?
Thanks for this is quite interesting, because when I saw first the word company building, I was going to my venture guys and that we have an understanding of it, and we understand the support of VC funds or for angel investors, PE investors in the growth in the setup of a company itself. And I think there are different ways to help a company.
With issues understanding it. With issues, I do at least have issues understanding it. Maybe
okay,
because you're.
Maybe you go to another person till the technician is fixing it. Okay, do you hear me now? Klaus, is it better now?
Yeah, I'm still there, but yeah. Okay, let me move this question with the question to Felix in the meantime, and then maybe you can start over again. Because Felix, TruVenturo is also putting a lot of emphasis on company building, if I'm right. So you're an expert in this field. Could you explain a little bit about what you understand by company building and the importance thereof?
Sure. I mean, company building that's where we originate from, right? I mean, we build companies in different verticals, ranging from deep tech to marketplaces, professional services. So we've built a range of companies, and well, for us, it's been I think very successful, frankly, and I think it's a great it's a great mechanism to create value ultimately. And that's why we do, and that's why we keep on doing it. And I also have my own case, if you like, with Foodpanda, that we sold to Delivery Hero and built a company, up from 0 to 2,500 employees in 4 years. So I mean, these are stories that are of course fascinating. And I think if you look at company building from the lens of a corporate, because I think these are the two entities that are engaging in company building. So you have, let's say, digital native incubators like us, and then you have corporates that engage in company building. I think it's a great tool, which is complementary to corporate venture capital and M&A. So if you don't find the right target, for example, that you can acquire, but you still want to get into a certain market, or you want to, occupy a certain space that has some kind of strategic relevance for you as a strategic investor, then I think company building is a great instrument to achieve that, really. And I mean, the benefits of company building are you can really build a business that is customized to your needs, exactly what you want. There are no strings attached. There's no complicated, cap table or earnout structure or anything. You can just build something that perfectly suits what you need. And what we've been seeing in the more, also since COVID, but also before that, is that these type of business building projects, and so we also refer to it as a business building project. It's not always a company building project, but in some cases you have corporates that, for example, want to build an additional service, or they want to build an additional product, and it has characteristics of company building because it's vastly new and very different to how they operate the business at the moment. So I think also corporates should not neglect the, doing business building or company building as a strategic instrument whenever venture capital or M&A is not the right instrument. And that's also where we, for example, help these corporates to get this process started, to identify an opportunity, to test a model, do a proof of concept, and then also to scale up the business. And that's, I think, a part where corporates very often need help because it's a bit of a different style of working. But I think it's a very, very important instrument in your mix of synthesizing and executing on your market hypothesis, really.
Mm-hmm. And in what form do you support companies when in the company building process? Is that rather do you will you only remain in the advisory board, or are you going to be to provide one of the directors? What is your strategy here? What works better according to your experience?
Yeah, so I think in my experience, you have different phases, right, of company building. I think the initial phase is, of course, where you need to have clarity as a company in what spaces do you want to move into, what are the market hypotheses that you believe into, how is your market going to look like in 10 years. And then you come up with an ideation process where you carve out certain business models that adhere to that hypothesis. Then you test it, and then you scale it. And scale it means you build a team, you fund the company, etc. And then you also do customer acquisition and really try to make the business work and pivot towards a product market fit. And we actually support in all of these phases. I think the most crucial phase for corporates where things mostly or very often take a wrong turn, and I think that's also true for normal startups, by the way, is once you launch, then finding a product market fit and a scalable setup. I think that's really the most challenging part, and that's where we support most, because companies and corporations very often, they sometimes have too much process and structure in place, and maybe also not the right people to do this kind of project. So that's why we can support by bringing in the right people and guiding the partner through this phase of starting up.
Mm-hmm. Okay, very interesting. Thanks. So, Steve, is your mic now working? Let's try again.
I hope so. So thank you very much, Klaus, for forwarding the question to Felix at this moment. And to be honest, I agree 95% with what Felix just said, and I couldn't agree more in most of the points. However, when you, Felix, said that bring the right people and helping them to customize the product, I think in the company building process, the connection network is the most important part. And that is something which consists Plug and Play, for example, as the big strength, because of our corporate partners. They're looking for startups startups, and startups are most looking, for a need and for a partner with, on the one hand side, money, on the other hand side, like the chances for them to prove their product and to get in pilot projects. And I think is it either company building or VC/PE investment. I think for PE investors and for VCs as well, it is very important to have a kind of track record. And I think Doris will agree with me in this point to not only offer the startup a certain extent of money at the right evaluation, of course, but on the other hand side also to tell them what is our benefit besides the money. I think in this regard, company building is all about helping startups with the advice, who they should need, and where the product can fit best.
Mm-hmm. Can we increase Steve's volume maybe if possible? Okay, thanks. Thanks, Steve, for this. I wanted to also ask Doris, who in tecnet you have also a special sort of service for the companies you invest in, right? To help them to bring their scientific results, their research, to make it a marketable product or service, right? Could you please elaborate a little bit on that? And is that something that is somehow related to the concept of company building in your view?
Sure. Of course, as a venture capital firm, as Steve already told, it's not only money, but it's the benefits beside the money. So as we are investing in rather early stages, scaling up the companies and especially helping them and by being the sort of sparring partner for them, because they really need not only advice but also sometimes only somebody to talk to and discuss with. What you are talking of is a special branch. It's called Research to Value, where we do have a dedicated team working with R&D institutions, and they're looking for idea creation in very early stage with researchers and help them to set up business models and to see how or in which marketplaces it could fit in. But this is a part not really in the venture capital part, but just before. And afterwards, we would start with an incubator. We are also invested to help them to list business, and afterwards we would invest with our venture capital fund.
Okay, understand. Okay, thanks for this. So my understanding is now that this is sort of a company building appears to be a process that can be applied not only to very early stage, but also to later stage, startups in a later stage. And this sometimes would be working sort of as a support in a change process from a regular startup to a scale-up structure, right? Maybe I think we're running out of time slowly, but Gábor, your take on this, I think your view is still missing. Is that something, do you apply company building as an instrument only to early stage, also to later stage startups? What is your strategy? How do you do that?
Yes, I think my view is rightly missing because we don't have a formal structure or a formal strategy in company building. But having said that, we are not passive investors, so we are trying to we are always sitting on the board. At least we have an observer seat, and we see the process rather a kind of a coaching process from the partners, and that there's this phenomenon supported by statistics that the highest probability of being in a car accident, causing or suffering a car accident, is not the highest when you got your driving license, but a couple of months later. And that's kind of analogous of what we see with our companies, that in the first 6 months, in the first year, everything seems to be going well, but then when the founders build up self-confidence, it can be sometimes a bit inflated, self-confidence and egos, to a point when I would call it an intellectual arrogance. And that's when we have to be very very cautious in steering them in a kind of a coaching process towards a more corporate-like behavior, to a more CEO type behavior, these kind of issues. But it's delicate. It's very emotionally intelligence heavy, I would say. But it's very important, I guess, not to be a passive financial investor.
Yeah, I understand. I know to agree. Absolutely. Thanks for this. So for actually quite a nice closing remark, this from your end, but I'd like to give the floor to all our panelists, at least for maybe 1 or 2 sentences, since we ran out of time already, but we started a little later. So your final remarks on the topic, maybe and a forecast of any funding or company building trends in the sector, in the venture capital sector for 2021, assuming that there will be a cure at some point in the first or second quarter. Maybe starting with Felix.
Sure. So my projection is that business building close to the core of corporates is going to accelerate significantly over the next couple of 6 months. It already is accelerating, but we'll see more and more corporates being much more active in transforming digitally than they were a year ago. So B2B is something I would really have a look out also as a VC for interesting investment opportunities to pop up.
Okay, thanks. Doris, what's your take, your final remark?
Yeah, I would agree. B2B is the place to be, I think so. We are always looking at B2B models. Nevertheless, I think there are now many new business models starting, and I think in 1 year time, it will show how fast this digitalization in larger companies is really going on, or whether it will slow down again a bit, and how fast they are going to adapt and to invest in new businesses and or rather be set up with their own problem. Crisis.
Yeah, I absolutely agree with Doris and Felix. I think the traditional 3T, like team, technology, traction, will still be 3 major criteria for a startup investment. However, I would add another D, saying how did the startup adapt to a digital world? So how did they work with the COVID situation? How did they adapt to a new work-life balance with working from home situations and so on? I think also in a startup world, although they're pretty open to this new trend. This is a factor which you have to take into consideration your startup investment process, and for startups, of course, to adapt in this regard to attract still the most powerful and smartest people to work for.
Okay, thanks. Gábor, your last words on
yeah, I
2021?
couldn't agree more. I'm expecting this industry we are in accelerating, and I expect to see more meaningful and down-to-earth value propositions coming in, helping the, well, it's a big sort of pathetic word, but helping the global economy restructure. As I said, I think this industry is in the vanguard.
Yeah. Well, thanks. I mean, that's really not the worst forecast I've ever heard. So with this in mind, I'd like to thank all of our distinguished panelists here. I think it was a great and very interesting and insightful discussion. I learned a lot. I hope all our viewers learned a lot. And yeah, I wish everyone good luck and much success, and also a very interesting rest of the conference here at AVCO. And thanks also in the name of CMS that we were allowed to contribute to this event.